Good morning this Monday, the 21st of October. I'm Grady Wolf, market analyst with Bell Direct. 6 straight weeks of gains were sealed across the major averages in New York on Friday, with both the Dow and S&P500 setting fresh records at the closing bell. Over the week, the Dow and S&P500 each gained 0.96% respectively, while the Nasdaq added 0.8%, with Q3 earnings results being the key driver of gains throughout the last trading week. Netflix shares rose 11% on Friday after the streaming giant beat Wall Street estimates for earnings and revenues for Q3 and reported a 35% jump in ad tier memberships on the prior quarter. Of the more than 70 companies that have reported from the S&P 500 so far, 75 have beat expectations, according to FactSet. The small cap space once again outshone the major players last week in the US, with the Russell 2000 index adding 2% at the end of the week. Over in Europe on Friday, markets closed mostly higher, marking a second straight week of gains boosted by a rise in luxury brands. The Stoxx 600 rose 0.21%, Germany's DAX added 0.38%, the French CAC gained 0.39%, and in the UK the FTSE 100 ended the day down 0.32%. Gucci owner Kering rose 3.5% on Friday, while Burberry rose 0.5% as investors saw Chinese stimulus as a boost for demand outlook for luxury European brands in China. Across the Asia markets on Friday, markets rebounded to close higher as stronger than expected GDP data in China boosted investor optimism. China's GDP grew 4.6% in Q3 compared to the same period a year earlier, which beat economists' expectations but was a slight fall from the 4.7% expansion reported in Q2. Retail sales in China also beat expectations for September with a rise of 3.2% year on year, while China's industrial output also grew faster than expected at 5.4%. China's CSI index rose 3.62% on Friday, Japan's Nikkei gained 0.2%, South Korea's Kospi index fell 0.6%, and Hong Kong's Hang Seng rose 3.61%. Locally on Friday, the ASX 200 fell 0.87% as a sharp sell-off in the utilities sector and stocks weighed on the market, while every other sector also closed the day in the red. The Aussie sell-off was on the back of China's economic data out on Thursday, indicating worsening economic slowdown out of the world's second largest economy, despite stronger data out on Friday. Flight Centre tanked 20% on Friday after the company released a trading update outlining a profit downgrade was imminent. On the commodities front this morning, oil is trading 2.05% lower at $69.22 a barrel. Gold is up 1.02% at $2,721 an ounce, and iron ore is flat at $105.37 a tonne. The Aussie dollar has slightly weakened against the greenback to buy 67 US cents, 100.34 Japanese yen, 51.41 British pence, and 1 New Zealand dollar and 10 cents. Ahead of Monday's trading session here in Australia, the SPI futures are expecting the ASX to open the day up 0.53% on the back of the global market strength on Friday. And now let's dive into some trading ideas for your consideration this Monday. Bell Potter has downgraded the rating on Lynas Rare Earths from a buy to a hold rating and have reduced the 12-month price target on the company from $8.30 to $8 flat, heading into the release of the company's quarterly production update. The analyst has estimated production of NdPr to fall 5% quarter on quarter and revenue of $121 million, down 12% quarter on quarter, after management guided to a slow start to FY25 amid the planned shutdown toward the end of CY24 and delay in the Mount Weld expansion. And Trading Central has identified a bearish signal on Paragon Care following the formation of a pattern over a period of 16 days, which is roughly the same amount of time the share price may fall from the close of 47 cents per share to the range of 38 to 40 cents per share, according to standard principles of technical analysis. And that's all for this Monday morning. Have a wonderful day and happy investing.